Good afternoon. Good afternoon, everybody. Welcome to Paul's Monday Market Update 188 for Monday, 23rd June 2025. I hope you're all well. I hope you have enjoyed the weekend in spite of the events of the weekend, and I hope you're ready for an interesting week in the market. As always, just before I begin, if I could just confirm that they can hear my voice and see the slides, that would be appreciated. My internet has been quite slow the last hour or so, so I'm hoping that all the tech is working for us in our favour rather than against us. If you could just confirm that, that would be very much appreciated. For those of you joining us for the first time, the Paul's Monday Market Update is literally just that. It is me flying through as much as I can get through in the next 25 to 30 minutes, looking at strength and weakness, okay, within the FX and indices and commodities markets, looking at a few charts of interest based on what's going on in the world and the markets, and then having a look at the live markets themselves. It is not a signal service. It is not a trade recommendation. It's just me sharing what I'm looking at, which might be of help and support to yourselves. As always, you're always very welcome here. Just remember that you are always responsible for your own trading decisions. For those of you going through your own trading journey, if you want some help from an accountability group, the VTP tag group is up and running, and you're very welcome to join that. You can either use the QR code or ping me a message if you want some more details. For those of you who want a little bit more of education elements, then as usual, I'll be delivering my Monday Market Matters webinar for active trades at 2 o'clock London time today. Today's education element will be all about attacking currency trends. You're welcome to join us for that. You can either join on their website or you can use that QR code to take you to the registration page. And I also provide a weekly market pulse update for Admiral Markets every Wednesday, 7 o'clock London time. You're very welcome to join us either through the website or once again through that particular QR code. All right, let's cut to the main thrust of us. So if you're joining us for the first time, if you're new to your journey, you might sort of maybe think it's a little overwhelming or intimidating. It's not really. It's just snippets from my own model, which I do every weekend. My own STAM model. I'm basically looking to identify where's the sort of the strength, the trend, and the momentum in markets based upon where's the strength and where is the weakness. So what's this telling us? How can we utilize it to help us? So here we are. We are into week 26, halfway through the year, okay? 23rd of June here. Where's the strength? Where's the weakness? We still have Euro still at the sort of the top of the pile, along with the Swiss franc. Sterling is still kind of having rolled over into its position on third, okay, in terms of strength and weakness. What we have on the other side of the other side of the market is basically we've got sort of Aussie here at the weakest, and along with US dollar, but we're going to look at that in a moment because I think that we might get a little bit of a change of that this week. And then we have the sort of Japanese yen has been weak, and condols, the rest of the condols kind of sort of mooching around in the middle. When I took a snip from my plugins, okay, just before we went in, it was just confirming that that's still that kind of strength in Euro and Swiss franc, okay, just going with that. Interestingly, Japanese yen kind of completely weakened, and US dollar was the strongest this morning, which was effectively confirmed by this, basically dollar strong, everybody else weakening, in particular Japanese yen. A lot of that, of course, comes down to the events of the weekend. I probably don't need to sort of tell everybody about those details. We're going to look at a few charts of interest relevant to it anyway in a few moments' time. But what we saw, and I was caught. I missed out on this on Friday. Was that initially, through the kind of the sort of second half of latter half of last week, rumours started to abound that basically the Americans will be looking to strike those Iranian nuclear reactors. There's a Iranian sort of elements of the sort of Iranian nuclear program, and what we really were looking to see was effectively Trump then came out at the end of the week and then effectively sort of looked to sort of remove that. So it just looks like someone's like being a little bit of a messing around a bit. So just bear with us 1 second. We'll just sort that out. It is a. Here we go. Just bear with me 1 second, ladies and gentlemen. Okay. Okay. All right. So yeah. So as I was saying, there was events at the end of last week that basically caused us some sort of. We were looking towards a kind of a bit of trouble over the weekend. And then invariably, Mr. Trump came out on Friday and said, no, we're not going to do anything for the next 2 weeks, and which kind of calmed markets down, as we'll see when we look at the live markets in a moment. It was interesting. I normally do my analysis on a sort of Saturday morning, a couple hours on a Saturday morning, and actually what we got to see while I was sat there doing it, realizing that actually Trump had probably played a blinder there and had just basically sent misdirection, and that actually there was going to be something going on this weekend, and that turned out to be true. And there's ways and means that I track that through some of my own models, but the interesting thing is that, having that happened, people were expecting major jumps in markets. Okay, when they reopened last night, people were really expecting that kind of risk-on shift. And whilst there was a little bit of movement, okay, on the gaps on the market open, they kind of washed out very, very quickly after that. Okay, they washed out very, very quickly, which was what we'll look at. And as I said, what we saw was not only dollar strengthening, but a bit of Japanese yen weakening. We saw, as we'll look at the moment, oil, gold, etc., immediately jumping up, but then basically washing out those gaps pretty rapidly. I take that, as we'll look at in a moment. I take that as basically overall markets were overall happy with the actions over the weekend. That actually they don't believe that at the moment it's going to be the start of serious trouble, and actually markets were quite happy to be. Quite happy to wash it off and remain go a little bit risk on, which is kind of interesting. And as I said, when we look at the live markets in a moment, we'll be able to get some sort of a bit more insight into what's occurring there. But when I look at indices, even though many of them still remain okay, either strategic or tactical buys. The only one that's changed is the DAX, which we'll look at in a moment. Oil and gold, okay, they are strategic buys along with silver. That's not really a shock. That in itself is giving you a hint about some elements of sentiment. VIX remains above 20, which is normally an indication of elevated volatility. That shouldn't really come as a shock. Maybe what some people might be interested in is that Bitcoin sort of shifted towards being a tactical short there, and we'll look at the chart there in a moment. So not really any massive changes, okay? Not really any, despite the events, not really any massive changes. Now, of course, things could all change this week and stuff if, events happen, if the Iranians decide to retaliate, okay? And of course, they've talked about shutting down Straits of Hormuz and doing other such things. I suspect what we'll probably see is that a lot of that is disillusionment, okay, in terms of, or rather, maybe they're sort of delusional is probably a better word. I think there might be one or two elements, but I don't think it's going to be in any way sort of this is not the 1980s, okay, where we had the tanker wars in the Persian Gulf. I don't in any way foresee us getting back to that at all. And of course, that then has an impact on, on commodities, which is what we're going to have a look at in a moment. So when it comes to some of the charts of interest, and what I do is put up a few different charts just of normally of like kind of stocks or ETFs that are relevant to what we're sort of looking at the moment and stuff about that. So it's a case of we wanted to be able to sort of work with that. Now, I don't know, there's clearly somebody is causing a spot of trouble there and stuff or what have you coming up there. Just bear with me 1 moment and stuff. So, Right. Okay. So I apologize if you can see that. That is not me. That's clearly someone has hacked in. One of the people who came in and sort of hacked and has put that in. So I apologize for that. So let me just do all of that. So anyway, to go back, as I said, we'll look at some charts of relevant interest. This is RTX, okay, Raytheon, okay, Raytheon, what do Raytheon provide? Raytheon provide missiles, in particular surface-to-air missiles. They provided quite a whole host, but the ones that are relevant to us at the moment are they provide surface-to-air missiles like Patriot, which many of you heard, and other elements for other pieces. As we've talked about before, okay, there has been a particularly good couple of years for defence stocks, and invariably what we are seeing going on in that kind of Iran and Israel tete-a-tete, that is invariably sort of feeding into it as well. So you can see that here, that effectively from about the last 18 months, from being down here at about $70, we've effectively doubled. All right, we've effectively doubled over the last 18 months or so, and we continue to push there. Okay, and so not really surprised when people are seeing these elements happening on their news screens morning, noon, and night, and then invariably looking to see what's the what that impact has in terms of demand for such systems, and so hence why we're seeing that work its way up there for Raytheon, and that's just a reflection of the world we live in right this moment. This one is NOC. This is Northrop Grumman Corporation. Okay, Northrop Grumman Corporation. Another defence company, but also they are the builders of the B-2 Spirit bomber that we saw operate today. Is hit across all of the major news headlines. Okay, across this last weekend. And invariably also are they, if I remember rightly, they are also building the replacement for the B-2, the B-21, etc. So I thought we might get to see some element of let's say, sentiment flow through into Northrop Grumman, but not the case so far. At the moment, I still see this kind of pivoting. It's pivoting around $500, highs at 550, lows at 420, 430. Look at the way it's basically respected that. Look at the way it's actually respecting the weekly 200 period moving average there. Maybe that provides a bit of upward pressure. But really, generally at the moment, I see that as just basically pivoting around the $500, and any kind of let's say any kind of media uplift, doesn't seem to have occurred yet at the moment. And also talking about some of the elements, okay, in terms of this is TA125 Tel Aviv Index, okay, not something I trade, but it is a chart of interest because of what we have seen going on for the last couple of months, etc., has not had any direct impact there on the actual Israeli index. What we can see here is this is the weekly chart. And of course, this is when the event started, 2003. Okay, when we got down here to about 1600. But you can see, despite that, it really has just been one-way traffic, and it continues to actually accelerate. And I suspect that that is just a reflection of the overall sentiment and risk-on sentiment in terms of the basically taking Iran off the playing field. Okay, until there is regime change, and I suspect that's really what everybody's expecting now in one way or another. And of course, that's people are sort of forward discounting that in terms of buying the future of that on the Israeli index. So that is what we are seeing there. Okay, that in itself, as I said, is another reflection of how markets have shrugged off this latest chapter, and actually how people are not expecting major kind of nuclear confrontation, but actually people are expecting there to be a complete regime change, and that itself would have on a huge knock-on impact to the entire Middle East. And then just back to normality in terms of one of the American companies who've got earnings reports this week is Nike. They're on Friday. This is the weekly chart of Nike. Listen, I'm sure most people watching this or listening to this will have had in many ways experience with Nike in terms of buying trainers or buying sports kit or what have you. But you can see that really they've been struggling the last few years. Certainly the share price from here over the last couple of years We've traded as high as $130, but you can see it's been a pretty clear trend downwards, hasn't it? The sort of big round number of 100, we might have pivoted around for a little bit, but really, it's just been one way, hasn't it? That kind of 200 period is sloping down, the 50 is sloping down, the 20 nicely bounced off the 50 and the big round number of 80, and invariably, I would look at that, excuse my drawing, that maybe as a bit of a bear flag. So people will be waiting to see what those numbers are on Friday. Is that enough to turn around this downtrend juggernaut, or is it actually just going to give you an opportunity to add to your position? All right, that's the end of charts of interest. I'm sorry that we had a couple of people in there causing trouble and stuff, so I do apologise and what have you. So I thought we might get some people today after the events of the weekend, but anyway, woulda, coulda, shoulda. Right, let us switch across to the live markets and see what's going on there. So just bear with me a moment, and we'll switch across to the live charts. Okay, so I hope you can still hear me, and I'm hoping you can now see the charts. These are my kind of indices and commodities STAM charts. What's this showing? This is showing Dow on the weekly, NASDAQ on the weekly, S&P 500 on the weekly, Russell on the weekly. I've got oil on the weekly, DAX on the weekly, Nikkei on the weekly, and FTSE 100 on the weekly. So it makes sense to basically perhaps start with oil. For those of you who joined us, we talked about here a few weeks ago about how we were looking at an inverse head and shoulders being created here on oil. Okay, West Texas around about $60 with a neckline there, and as you can see, the events that we've had over the last few weeks have pumped us higher. And interestingly, Friday, okay, having pushed down during last week, we kind of rallied our way back up. Kind of a bit of it is a kind of momentum pin bar. But then if you think, this is where we closed on Friday, and then this is where we reopened. Okay, last night. If we go down to the 1 hour chart, this kind of shows what we were talking about. Last just a little bit before, namely that this is the hourly chart for kind of Friday, right? Let me zoom out a little bit. So this was the previous week, right? Thursday night into Friday, when there was the start of the campaign, we fell away. We gapped up last weekend, okay, but then came back down. The same again, we gapped up, from where we closed here on Friday to where we opened on Sunday, but we've literally come back and filled that gap pretty much straight away. As I said, that is, the market is telling us that it's quite happy with what happened. It doesn't have any issues with it. Okay, it is basically seeing it as a positive move and not a start of sort of a nuclear confrontation. And so that's where we find ourselves, and that is, I think a lot of people might have got caught kind of trying to buy on the open. Trying to buy on the open, and might have really been kind of a bit caught, a bit slammed on that. Really the buy was at the end of last week, okay, running into the weekend, not after the event, okay, as we can see here. And that has had a little bit of an impact on, if I look at some of the others, okay, so let's just even have a look at like NASDAQ on the daily chart. Yes, price has been drifting lower from the highs. Yes, we did gap down at the open, but as I said, even that, if I go down to the hourly chart on the, we had kind of all sorts of messing around. Friday closed, Sunday open, but we filled that gap. Bang, we have filled that gap, okay, on the indexes. Now, of course, we've got a fair bit of news coming out. We've got PMIs coming out in America this afternoon. We've got Powell is testifying tomorrow and Wednesday, and there's a good bit of other data coming out this week. It is a busy week in terms of formal economic data, but equally we're just looking to see the impacts of let's say the geopolitical tensions. And actually, my view is at the moment, as we can see with oil, as we can see with that Israeli index, as we can see with the main indexes, people are washing it off a little bit. The only index that maybe has shown a little bit of weakness has been the DAX. But I mean, the DAX has been on a tear. This is the weekly chart of DAX. It's been on a tear for a good while now. And, if you go down to the daily chart, that's what we've seen us drifting a bit lower. We're back here at the daily 50. I'll be interested to see, does this hold on as a as support, okay, for us, or do we break it and go lower? If you looked at this morning, the kind of French PMI data wasn't good, but the German PMI data was good. So, we will, people maybe sort of look into that and see that maybe Germany's turning a corner, okay? Maybe Germany's turning a corner in terms of its economy, and people might be happy with that. I think a good part of maybe this runaway or this kind of sort of drift lower has actually also been to do with the strength of the euro having an impact as well. Close to home, all right, FTSE. For me, the FTSE, we've been up by those all-time highs, okay? It's grinding its way up, but, last week's price action is not exactly very what would you call it? Confident, all right. The PMI numbers were okay. They're they're on targets and stuff. No big shocks there. But what kind of interests me is that we weren't able. We got up close, but we weren't able to push. Do we need to sort of drift away to gain the energy to come back up, or is that us now having a bit of a summer breather, okay, and starting to drift lower there? It's the price action, isn't it? If I look at that price action there, it's not terribly bullish, but then something could happen this week. If there is something like regime change or something, that could be bullish. Markets could take that all in its stride and turn around and be bullish. So that is just on my watch list, but I will wait to see how that particularly plays out. And furthermore, sort of just with my ideas, okay, or in terms of my view and how markets reacted to the events of the weekend, gold weekly chart, been in a great run, been in a bull flag, okay, last week, kind of when we had the start of it, what was that, like a week Thursday, week Friday, that gave gold a real bump. But interestingly, as you can see, last week we kind of sold off on it a little bit. Okay, everybody, they had it, but then basically we drifted lower. And then, as I said, this is the hourly chart. Okay, the hourly chart, if you look at the end of last week, we were drifting lower, and then we've basically, as people start to think that something might happen, gold rallied its way higher, and then we gapped up. But once again, like oil, like the others, they've gapped up, but basically it's just fallen away and filled. And then, as I said, all of this market giving us information that actually at the moment they're quite comfortable with what's happened. They are not in that kind of risk-off mood at this moment. Now, of course, that can change, all right, with one tweet from President Trump, but that's the we have to wait for that. Before we just look at dollar and sterling, Bitcoin. I said a couple of weeks ago that we were up above 100 grand, and 100,000 is like the kind of line in the sand now, and I need to see us stay above it. I was interested that this to me is like a double top here. There's lots of wicks there on the weekly chart. And when I went down to the daily chart, we were kind of selling off, and then we sold off quite a bit over the weekend, which kind of, we can see here, this is the 4-hour chart, all right? Okay, how we've sold off and went beneath 100,000. Now we've clambered back up above it. It would not surprise me if we came back down and retested that during the American session this afternoon. And then, as I said, I'll be waiting to see, does 100,000 act as that kind of big round number, that psychological big number that adds as support, and people use it as an opportunity to buy a dip, or whether if that cracks, do we go lower? Okay, so I expect a test this afternoon in the next 24 hours, and we'll see where that takes us. Now, some of that Bitcoin weakness is because of a shift into the dollar over the weekend. So you have that, and that also has that impact on oil and gold as well, as we've seen. So what we'll do is we'll have a quick look at the dollar index and the dollar majors, and then we'll have a look at the sterling. We'll finish off on sterling as we always do. So this is a dollar profile here. Dollar profile: Aussie dollar, euro dollar, pound dollar, dollar Swiss, Kiwi dollar, dollar CAD, dollar yen, and the dollar index. So update these a little bit. Let's have them all on the daily. I traded dollar yen to the long on an intraday basis here, but we'll look at that in a moment. What I really want to look at, as always, is the dollar index. We'd broken that kind of 98.50 low, but we talked about this last week. We're kind of, was it going to continue, or were we going to find support? I wouldn't necessarily say you see that on the weekly chart, but if we start to go down to the daily chart, I was intrigued to see the run lower, and then basically as you can see here, we have just basically moved our way higher, and you can see over the weekend that has been some, an element of dollar strength continuing. Now, one swallow doesn't make a summer, all right? for me, we need to get above the 20, above the 50, and really above 100 to give me conviction that we are that there is real dollar strength coming back into the game. But certainly at the moment, the kind of short term has been to the bullish. We started it that Thursday, Friday at the start of the campaign. I mentioned it last Monday, double bottom with the second leg being a bullish key reversal. We then came down and made a triple bottom, but it was also a higher low, and we've just ground our way higher here. And once again, if I update onto the daily, we gapped up there and have continued to just work our way up there on the dollar index, and that is why. That's why we've seen bang, weakness Aussie dollar, weakness Kiwi dollar, weakness even against the Canadian dollar, even weakening, weakness in terms of Swiss franc, okay, weakness sterling, weakness euro, okay, and a lot of weakness against Japanese yen. So part of this is a geopolitical element. Part of this is a case of is that. I wonder if we're going to get a bit of a short squeeze. If you look at the COP, there's an awful lot of people selling and have been selling dollar, but I wonder whether we've got the conditions with the geopolitical event to give us a bit of a short squeeze on dollar and the dollar major. So you might want to watch that this week. All right, and let's finish off with sterling. Oh, I got this. Yeah, always finish off with sterling. So this is my sterling profile. Okay, so pound against dollar, euro sterling, pound Aussie, pound Canadian, FTSE, pound New Zealand, pound Swiss, and pound yen. Okay, so there's some interesting elements here for me. So I think I talked about this last week. If I look at cable, weekly chart it's been a great run, okay, and a lot of that is dollar weakness. But then I think I put out a thing at the start of last week about how I thought we were in this bull flag had turned into almost like a rising wedge, and we've broken that, and we've worked our way through these kind of these levels, and we're here at the 50. All right, here at the 50 at 134, and so I'm waiting to see. We've got Powell testifying. We've also got Bailey speaking this week. Okay, I'm looking. Is the support of the 50? See how it supported it there? Okay, a couple of months ago. Is there support to push that up? Or is this a case of we're getting a little bit of sterling weakness and a lot of dollar strength, which means it takes us back lower and really looking back then down towards about that kind of 132.50 level. Certainly the price action there for the most part is not terribly bullish, is it? So that's a case of that's just reflecting and reinforcing that there's a bit of dollar strength coming in and with a bit of a sterling weakness there. It's not sterling weakness against Japanese yen, though, all right? And that's probably, as I said earlier, that's a little bit, it's weird because against the Japanese yen, everybody's risk gone, all right? Everybody's selling yen, all right? Everybody's watching that and selling the yen against pretty much all of the majors, and you can see the way that has played its way out there. But interestingly, when we look at the other side of the risk, and the one I've talked about a good deal is pound against Swiss franc, and as I've said, really, for the good part of 5-6 weeks, we were just literally bouncing back and forth because pound and Swiss franc were 1 and 2 on the STAM, 1 and 2 in terms of strength v weakness. And I said I was using this as a risk barometer. If we power higher, that's risk on, sterling strength, Swiss franc weakness. If we drift lower, that is risk off because that's sterling weakness, Swiss franc strength. That's what we have done. I wouldn't exactly say it's absolutely collapsing there, but certainly, okay, at the moment, that's what I'd be looking at there. I'll be looking at this kind of level about 109.50. If that breaks, that's continuing with a little bit of that Swiss strength. And this is probably an indication of some of that sterling weakness. If you look at some of the condols, okay, pound against Aussie, we can see that has strengthened. Pound against New Zealand dollar, right? Aussie and Kiwi have weakened. Canadian dollar's been a strong one. It strengthened against sterling because, of course, there was the pump in the oil price, which was reflecting that. But actually, over the last couple of days, it's got a little bit messy there, isn't it? I'd say it's like it's coiling up there. That's terrible drawing on my side, but I hope you get the gist. And then finally, to finish us off, euro against sterling. Remember what I said, on on my STAM, euro is number 1. Sterling is dropping its way to 3. On the daily chart, euro sterling is just reflecting that. That is the daily chart just working its way higher there, isn't it? Just working its way higher, and even the weekly chart. The weekly chart, we closed above the weekly 200. It wouldn't surprise me if it came down and tested it. All right, but you can see that is basically a reflection of euro strength, and a lot of that euro strength is, there's an element of good. Germany's turning its corner, but there's also been an element of anti-dollar, that kind of anti-dollar trade. I am going to be curious to see how long that holds up for, as people start to look and say, what America's done. Is that going to be a case of actually people sort of, once again turn back towards the US, or does it accelerate people moving away from it? And I think that's one of the things I'll be looking at for the price action over the next week or so. Okay, there, ladies and gentlemen, let's draw it to a close there. I hope you found that useful. I hope that's given you a little bit of help, a little bit of insight. I apologise for the idiots messing around earlier. I do apologise. Okay, I'll try and clean that up. And but yeah, I hope you found that useful. I hope that's given you a little bit of help and insight. As always, I wish you the best of success in your own trading, ladies and gentlemen. Hope you have a fabulous trading day. And I'll look forward to speaking to you soon. But it won't be next Monday. I'm back in 2 weeks. Okay, I'm off next Monday, but I will be back in 2 weeks. Those of you on the VTP courses, stage 1 is on tonight, the last call there. Stage 2 is on tomorrow, and VTP Tag is on tomorrow as well. Everybody else, have a fabulous trading week. Thanks very much. Cheers.